Okay. Good evening, ladies and gentlemen. Today, I'm going to be talking about, risk management, portfolio sizing, how you should be sizing respective to your portfolio, where you should be taking profits, how you should be, sizing into a play. This is irrelevant to TA, but more so of how you position yourself into a play, right? And as you know, in the market, $1,000 port. Let's put it here. $1,000 port, $10,000 port, or let's use 5,000. We're not going to use 10,000. We'll use 5,000. We'll use 10,000, and we'll use 25,000. Right? The market, you have to treat it like a workplace, right? Your portfolio size is your position in the workplace, right? When you have a 25K account, you can do things that $1,000 account cannot do, right? When you have $100,000, you can take positions and position yourself differently than an individual with a $10,000 account or a $5,000 account would, right? Now, for the first instance, I would like to go and look at NVIDIA, right? NVIDIA is on watch for me this week, right? Looking at NVIDIA on the daily, right? And opening the book, looking at the shorter time frames, I see that NVIDIA probably has a little bit more room to come down to this support area where we had bounced off previously twice, right? And that area would be around 156, 157 level. If I flip to my options book, or if you open your uh, brokers now, if you look at the NVIDIA 170 puts, 150 puts, I apologize, they're at 75 cents. Okay. So if you're $1,000 account and you're looking at a 75-cent contract, can anyone reply to me in the chat here and tell me how many contracts do you think is suitable for you to size into this play? Two, two, one, two, two, one. Okay. So whoever said one is correct, whoever said two is wrong. Why? Because at 75 bucks times two is $150, right? Which is equivalent to 15% of your port, right? No, $150 is 15%, not 75% coupon. You need to, okay, anyway. The point is 15% of an entire account positioned into one play is over leveraging, is an over risk in itself. If you were a $5,000 account, can you tell me how many contracts you can take? Four, three, five, five. If we're limiting ourselves to 5% of the account per play, not all in or all no. Five, it'll be $500. So four, we'll see four, five, five is 350, six is about here, 75, six, 450. So six contracts, right? Six contracts would be equivalent to $500. That would still be over risking, right? But with my approach, what I would recommend is $5, 5% per swing, 5% per swing, 10% per scalp. Why? Because say you enter here, let's say we enter at six contracts on the break of 169, right? How I would take profit on six contracts is because this is a scalp and I'm oversized for a $5,000 account, I will not take this full position into a swing. What I will take into a swing is three contracts at most. Why? Because that's only 225 bucks, which is 5% of the account. You see, you can start off and you can take profit at every level you have. My next level is 162. So if I'm looking for a break of 169, My first take profit level would be at 162. There might be a level I'm not seeing at 165 if we need to go back. But if I'm taking 6 contracts on the break of 169, let's say we had a level at 167, just as an example, right? There's a level at 167. I'm entering with 6 contracts. How many contracts would I be looking to trim at my first level? Because I have 6 cons, 3, right? And if we take 3 contracts off the table, okay, we're remaining with 3 contracts. Can I afford to take these contracts all the way to 0? No, you can't. So what your approach would be, right, is when you take this 50% play or 40% play, you trim out your first 3 contracts and then you trim out 2 more or set a stop at 2 at break even, you're able to hold the last $75 runner. Why? Because you made on your first 3 contracts 50%, which is what's 50% of 225 times 50% would be $112, $112.5. Therefore, you're able to take a 75 contract as a runner, $75 contract. But as soon as you take 2, that's $150 you're risking, which is more than your realized profit. Your cost basis remains more than your realized profit, right? Not to focus on this one too much. Now let's go and see a $10,000 contract at a 75-cent contract for the NVIDIA puts. Okay, times how many contracts can we take on a $10,000 account? If you're a $10,000 account, 10 would be 750. That would be adequate. We can take 10, right? That would be 750. At the first take profit level, how many am I trimming out? 6? I would say 5, right? Always look to trim out half your position first, right? When you trim out 5, you'll have 5 remaining, right? Now, when you trim out 5 and on your remaining 5 contracts at 50%, right? How many can you afford to take as a runner? Or what, how would you approach this with 5 remaining contracts if you had already realized profits on your first 5? 2 runners, exactly, right? You can trim 3 at your next take profit level, 165, or let's say, you know, let's say NVIDIA tests 167, you trim out 5 contracts, right? And then NVIDIA goes back and retests the 169 break for a confirmation. You do not want to hold your contracts and let IV eat through them. So you would get stopped out on 3 and hold 2. Why? Because when you take 50% on a $325 position, that's what? 175 bucks. 100 168 bucks. 167.5 bucks. That way you can risk 2 contracts to hold for your swing idea with a little bit of profits. Now you guys have a more wider perception of options being a cash intensive investment approach. Like this is not a stock where you can buy and hold, right? These contracts, they deteriorate fast. You need to play off momentum. You need to scale in, scale out. If you guys have noticed, many of times we would be playing the same contract, the same strike price, I mean, but with different expirations, right? And that's another thing that has to do with sizing is if you're able to pick up an extra week or an extra 2 weeks because you're one of the larger accounts, then that will help you in options. Of course, why they deteriorate slower and you're able to hold them. You know, my motto is size, light, and hold. For a 25K account, who could tell me how many contracts can we take? on a 25K account if we were to position 5% in the swing? $25. 15. Not 16.75. Right. So 10% is 2,500. 5% is 1,250. Divide that by 75 cents. You could take 16 contracts, right? And when you take 16 contracts, you see how it becomes easier when you trim 8 here minus 8. You'll have 8 left, 8 remaining, right? When you get stopped out on 8 when you take 50% profit on 8 contracts, let's assume this is going to be a 50% play because it's on a Monday, right? Stream Deck doesn't have a 16. You can align it to 16 contracts. Take away 8. You're held with 8 contracts. What are your first profit on the 8 contracts that you just took? 1250 divided by 2, 625. That means you just took $625 profit on 8 contracts. If you have $75 a contract and 8 contracts remaining, what would you set your stop at and leave the rest to run? How many can you afford to let run? The 8 already cost you $600. See this 8? It costs you $600. You already took $625 profit. See, as you grow your account, you were able to leave these runners. Would 16 be cons be light, or depends on the individual? You have to set a limit for yourself as a trader. As an individual that's growing their account, and how I grew my account, I stuck to 5% per swing, 10% per scalp. After taking profit for the first 4 contract is the stop for the last 4 set at break even. That's what I'm trying to tell you in this class is see how with $1,000 you're forced to take your profit at the first take profit level because you're limited to 1 contract. At 5,000, you see when we were limited to 3 contracts, we had to take the 6 contracts. I'm sorry, right? We had to take 3 off and then trim 2 and leave 1. Whereas on a $10,000 account, when we took 5, we were able to stay with 5. When we took 10, we were able to stay with 5 and then get stopped at 3 and then hold 2 runners. Whereas on a $25,000 account, when you hold 16 contracts and you take your first trim at 50%, you realize $625 in profit. The cost basis of the remaining 8 contracts that you have only cost you $600 to buy, meaning you're already in net profit $25 on this play if the remaining 8 go to 0. That's what I'm trying to say is that as your portfolio grows, yes, thank you, Neve, exactly, because your realized profit is more than the cost basis of the contracts. 8 times 75, 75 times 8 is $600. Exactly. And then let's go on and move on to a $100,000 account. And I'll show you why this becomes much easier to do as you grow your portfolio. That's why I always say compound. Compound. Even if you're growing $1,000 into 2,500, it'll take you just 10, 12 days of consistency to be able to make $80. Let's say you make $80 a day on $1,000 port. 8% is not undoable, right? With risk management. Can you go deeper into compounding smaller accounts? I will. But let's finish this and I'll end the recording and I'll answer all your questions. So when we're sticking to 5%, what's 5% of 100,000? 5,000. 5,000 divided by 75, 66. So 65 contracts. Let's say we're taking 65 contracts, right? Our first trim, what would our first trim be? Let's say 35 contracts. Let's say 35, just so we can keep it even. You know, as you grow your portfolio, you're not going to nitty and gritty on the 5 and 10 and $15. Let's say we trim 35 contracts, we'll have 30 left. Or you trim 35 contracts, 75 times 30 minus 250 equals 1,125, 1125, right? 11. We're trying to exactly. Isn't it better to pick your contract than 200 to 300 rather than 75 bucks? Well, that's another thing that I'm trying to open your eye to here, right? The lower the cost of the contract, the more contract you can take. Now, I'm going to use the next example on Tesla for each one. And a lot of you with freaking $1,000 accounts will go and take a $600 Tesla call and will assume that this is okay. Or on a $5,000 account, you will go and take a $600 Tesla call and think it's fine. Or on a $10,000 account, you'll still go and take two Tesla calls for 1,200 and think that's good risk management, whereas it's not. The entire market moves in percentages, stocks move in percentages, options move in percentages. It's just finding your ticker. There are many times where individuals like Rippy Applemode have led the VC and taken contracts on like SPY for like 17 cents to like 35 cents or 40 cents, right? It's just finding your niche, finding the ticker that fits your portfolio. Tesla does not fit $1,000 portfolio. Tesla does not fit a $5,000 portfolio. You know, that marriage to Amazon that many of the retail traders had is essentially what, you know, sucked the entire port away, right? Playing 500, 600, $700 cons on accounts that are sub 1,000, sub 5,000. Would you recommend buying small cons on Tesla? Yes, as you can see, whenever I signal Tesla, it'll be a very far out the money call because they will still move, but the cost is less and taking that hit would be less, right? It's less on my portfolio, it's less on my mind, it's less on everything, right? When you guys risk your money in the market, that's what affects your psyche and your emotions into making decisions, right? No one tell me, oh, I don't care about the money. What we all have a threshold, every single one of us, because the market moves in dollars, the market needs money, and that's where our emotions get attached. And that's what separates the good from the great, or that's what you'll learn throughout your time. What about buying out the money contracts to lower the contracts you can afford? For example, X10 times 12 cons, 120 bucks. That's still over leveraging. To 8 contracts would be prime, right? And you would still have to take profits in the same day. As you can see, you cannot let all your contracts run. See the 1150, this 30 times 75 equals 2,250. We wouldn't be able to leave these 30 runners, right? On the larger account. So we would trim. How many more can we trim or set a stop at break even for 1,125, 1,125 divided by 75? I can take 15 contracts for free. So I can set a stop break even at 15 contracts and then hold another 15 contracts all the way to zero. Why? Because when I start to exit my position, I'll look at my realized P&L over cost basis of remaining cons. If I cannot afford to take it, I will not leave it. I'm not going to let it go red, right? Just so I'm holding, because a lot of the times
Many of the smaller port individuals will miss the first trim, will miss this, or will not take the first trim, will not take the second trim, and will continue to hold. And then let's say if we are in puts, a catalyst will come in after market as usual, because you guys know markets always moves after hours, always, right? And then you get wrecked on your put or your call, and you're not securing your profit. As your account grows, you can take these minor L's left and right, but as you're a smaller port, you can't afford to take just L's left and right. But if stock goes against you, as soon as you enter, it never hits your first profit target. So as you can see here on NVIDIA, right? My entry at, because I have it charted out, my entry would be a break of 169. My stop, as soon as I enter, right, would be at 172, because I can see one rejection, a clear breakdown, retest, rejection, right? And clear rejection all day at this level, right? So this would be my exit point. Personally, you're either selling everything and not trimming or leaving runners. No, I don't. And I actually have an issue with Uncle Whale about this, but for another time. What if stock goes against you as you enter and never hits your first profit target? Okay, Valley, good question. This is why we like to remain risk managed, because say I enter with 5% of my portfolio and this play goes against me, right? As long as it's not Thursday or Friday, this should not tear up more than 50% of your position, unless it's a way out the money contract, way out the money contract, and then the stock is crashing. But or the stock is just ultimately pumping and your puts go to crap. But these are our levels. We play with our levels. The market moves in percentages and the stock moves in dollar amount. So say this is my exit, right? If I'm entering with 5% of my port and I lose 50% of that 5% position, how much is at max risk of my entire portfolio on display that I'm taking? Because someone answered 2.5. There you go. And then when you're down 2.5% of the on the day, are you going to make irrational decisions? Are you going to have a bad day? Is it going to affect your personal life? Is it going to affect you going into the next trading day? Try. We could try. No, of course it shouldn't, because market is all about wins and losses. We want to minimize our losses and let our runners run. Now for a small, you just need to make your next trade to make the loss back. Essentially, yes, that's only if you're down 100% on the contract. Yes, but on in the options market, it's very easy for us to achieve 100%. You guys have done it, you've been in it, you've seen it, you've paper handed it. So you should never lose more than 2.5% in a day. That's not what I'm saying, because that's that's all in relation to you and your how risk averse that you are personally. But for a particular trade, and if you want to build consistency and you want to build solid habits which make you a better trader, you shouldn't take more than a 2.5% L on a trade. And if you're down more than 5 to 7% on the day, it's best if you just stop. It depends on how many trades to take. Well, it doesn't matter, because at the end of the day, you're aiming to be a consistent trader. You can't be consistently taking losing trades and expecting yourself to become profitable as a trader, right? You're looking for consistency. So build the consistency with smaller size, and then you can begin to size up. When do you begin to size up? You begin to size up while growing your portfolio, right? A lot of people have this common misconception of getting rich quick. It's not the way to get rich. Say you get stopped out. Do you stop for the day? What are you looking for next? As long as I'm in the right state of mind, as long as I'm executing my trade idea, uh, and I'm still in, like, I still feel clear-headed, I wouldn't stop trading just because I had one bad play. But I do have a rule set now, which is just because I'm at the level of consistency that I want to be. So if I miss 2 or 3 plays in a row, that's my cue to just piss off for the rest of the day. You can afford not to have some, but we can offer for smaller accounts. Problem with some of the trade is that it stops us and then it goes green. This is where I have trouble to either put a stop loss or not. So, okay, here, this is what we'll say. Okay. Where's our notepad? We're gonna go back to the $1,000 uh example for small accounts, right? On this particular Tesla trade, it's a $75 contract. Okay. And it's gonna cost us 75 bucks to open, and it's 7.5% of our portfolio. Now, because options is a cash intensive game, right? For smaller ports, like I said, you would need to take profit at your levels and you would need to respect your stop loss. So, for example, say I'm a small account, right? So I will enter at the break of 169, right? I will enter one contract, right? When it gets to 167, Mr. Trife and whoever is a smaller account, when it gets to 167, that's my first take profit level, right? That's a level that I have marked on my chart for a reason. It's not there for me to just say, oh, hi, how are you? When we pass by it. No, it's for me to act upon it, to act upon the level when we approach the chart. Now, when you're a smaller account, it's unfortunate that you have to be limited to this one contract. You cannot leave a runner. Get out, take your profit, build the port. That's exactly what I'm saying, is that you cannot afford to do it. Does that make sense now? And if the trade goes against you, right? You enter the trade, you're risking 7.5% of your port. If that trade goes minus 50%, how much of your port goes away? 3.25%. Now, we are executing also, like everything, based on our levels. So if I see that 172 is breaking to the upside and it's not rejecting, like I've seen it reject and break here, there's no point in me staying in my trade, right? I need to get out. I need to execute based on my chart. Now, with the IV, with the ever-changing premiums, with the volatility, I can't tell you if you're going to be down at this level 5% or 50%. Okay. But I can tell you that I'm not trading the contract price. I am trading the stock and the option based on the stock, right? So unless it breaks, I'm not cutting it. But if it breaks, there's no reason as to why I should hold this contract if I know for a fact as a smaller account, I'm not able to hold this contract. That's what makes a difference between someone like Uncle Whale or Rippy Apple or whatnot. The ability to be able to leave those contracts as runners. Sorry if I missed this one, but what's your ideal percentage for 5% for a swing and 10% for a scalp for a start? How long did that take, bro? I started with 500 and my account is at 7. It got there by taking $20 to $50 profit. Yes, it is unfortunate, but the smaller account you are, the longer it'll take to build. But with compounding and being consistently profitable, it's not going to take you that long. But trying to hit home runs day in and day out is not going to happen. At what point do you exit the last runners? Do you have a final price target in terms of option stars, or do you like have price actions when the stock is over the move? So a lot of the times is we'll end up with like a runner, 2, 3, 5, whatever it may be, right? And like I said, because I'm in that mentality where I'm able to always keep this in mind, right? Realized profit is over the cost basis of the remaining contract. So it allows me to just hold them to the end of the week if they're in the money, right? Or let's say, I mean, we completely break out like on this chart or break down and on Nvidia, let's say I'm honestly targeting the 155 range, right? If we 157, 155. If we break this 157 range, like I would hold, right? But uh as long as trend is intact with me, I'll keep my contracts. But if trend does flip, so this will be my stop for today, right? And let's say we're in profits on display
and then Nvidia closes at 167, right? And then tomorrow I open the broker and we're reversing, right? And we break above 172. Just because I can afford to leave the runners doesn't mean I'll always leave them. Like I'll probably cut like if I have like 10, I'll probably cut like 5 or 8 and leave 2, right? It just depends on you personally. Oh, the 69-minute chart. Yeah, it looks pretty bad, the 69-minute. It's bear flagging. Today took a 5K account, I think it wiped it back to 5K in 3 days. Yes, unfortunately, Sprinty, it's stairs up, elevator down. That's the market. The overconfidence. Yeah, overconfidence. If it broke above, would you fill calls for a scalp? I would fill calls for a scalp if I'm fast enough to do it or if I'm in the right mental state. Because a lot of the times is um us humans just generally when we're I don't want to say bias even, just when we're aiming towards a direction, it's hard or not hard. It's hard to flip quick, but if you can do it, yes. In your opinion, who should take the smaller account holders primarily take their place from? Um, Me, you can take Jarvis, you can take from Prodigy, and we're implementing more ways in which you can also depend on yourself as a trader rather than just from the plays, right? Brother, I found success lately for sizing for zero on a large for taking trades with only 0.5%. I had the conviction I only need. Do you still trade sizing for zero on a lot of the trades? Yes, yes, lunch money. But I'm not now. I'm teaching you how to grow a portfolio. So I'm at a point where like I can lose the rest of the year and I'll still be in profit. Like it's different, right? Because there's been that consistency. With that consistency comes those profits and the leniency to like, wallah, do this and that. But like, uh, when I signal a play, I only signal the highest conviction plays. I don't just signal anything. Sometimes I'll take plays and not signal and then they'll go worthless. And sometimes they would. That's not the matter of it, right? But um, don't compare, right? Everyone has different emotions. Everyone's trading a different portfolio. Everyone has a different approach. You will find your perfect like fit, you know? Would you buy further out the money contracts to lower the premium to fit the percentage of your port? As a smaller portfolio, yes. And I'll try to pick up time on them. But I will also look for the ticker strife that are like what are the smaller tickers like AAL, CCL, Apple. I mean, with the VIX now, their premiums are kind of high, but Apple's premiums are cheap, Microsoft's premiums are cheap, and you can get really beautiful moves. I mean, even Microsoft on VC Friday, we took the 250, 2.5 puts, and look how far they were out. And we were able to take them from 61 cents to like 92. AMD also as well, yes. AMD, but AMD for the price of the stock, the premium is kind of high, but AMD still moves nice. You're right. Yeah, we're listed for small account tickers again to trade. I'm not sure, but if I'll look for it. If there isn't, I'll compile one for you if I can't find it. Don't play SPX unless your report is over 25K. Yep. SPX is a home wrecker, is a widow maker. Having trouble with technical analysis. So much shit on YouTube and feel like I'm gathering too much information and I feel like I'm overthinking my setups or if I'm doing anything right. Any advice? Try to block out all forms of news, social media, everything. Okay? Don't pay attention. I mean, like, just starting off. Later, you're going to have to, it'll help you, catching catalysts and news, yes, but uh, most of the time, man, news is fake. Okay? Whenever they call for a recession, market bottoms. Whenever they call for a rally, market dumps. Whenever they say, oh, you know,
Kathy Woods sold, it pumps. Kathy Woods bought, it dumped. Like, you know, buy the rumor, sell the news. In every situation. In every situation. Now they're saying, wow, oil will keep going. Probably gonna crash soon. We'll see. We'll see. Right? But that's why our risks are always limited. Because the option, right? The option can always go to the maximum downside is I'll do it here, yeah. Maximum downside of an option is zero. You can legit just go to zero, right? But the maximum upside is way over 100%, 1,000%. And that's why you let your runners run. As long as the stock is going in your direction, you just let your runners run. But you can't do it with funds you're not comfortable with risking, or on a position that you went green on and you're able to let go for free, but you're just holding just in hope. Is Strangle a good strategy for FOMC? Yeah, it is. Honestly, if you're able to pick up a call and a put right before they start speaking, you can probably exit both for profit, or just hold them both, and one is going to go 500%. I can guarantee you this. At this point, in plays like Zon, we should only have runners left. Yes, abs absolutely. We entered in when I was on the break of like 65 or 85, somewhere here when I drew out the fibs. We've been having them since here as bull flag break. Yeah, since like January, February. And this is another like example of the July calls, of the January calls, of being able to hold runners. Halas, the realized PNL is over the cost basis of the remaining contracts that I have. Boom, move on with my life. Yeah, since if we know SPY is about to have a leg up or leg down in the next 15 minutes, we play a cheap out the money SPY for a scalp in that direction, regardless of account size. Yes, you can, especially on tickers like SPY, and I do have to say this, SPX, of course, but there's always liquidity in these contracts. You know, you can play an out the money, you can play a $400 call on SPY Monday, and I bet you over anything is you're going to find 100K open interest in this. Anyone can get filled. I mean, 120K volume, not open interest, right? And if you spot a reversal, right, it just you guys have seen it even without the money contract. They're very scalpable. It's just your timing, right? If you miss your exit on an out the money contract, when it goes back against you, it's not going to fall like a 392 call would, or like a 393 call would, where it goes, back down slowly and it drops in 1 cent increments. It'll go from, if you pick it up here at like, let's say 8 cents, it'll go right here to 24 cents. And as soon as it rejects, it's back down to 15 cents or 14 cents or 12 cents. That's the difference without the money contract. What percent gain do you start taking profit at, and what percent loss do you exit the trade? I don't have a percentage on the contract itself. It's all based on the chart. So if I'm taking, for example, if I'm looking for, so we're above 390 on SPY. Okay, I'm just giving you my thought process. If we break below 390, I will fill for puts and I'll take it for 387, 388 first level, right? But if I get faked out and it goes back up above 390, I'm gonna exit. I'm gonna exit because there's no point holding this position. Or if your size is really light, you can be extra risky and hold for the 393 rejection, right? I don't recommend average downs. I will never recommend average downs. Very rarely do I do those, but sizing light also allows you to do this. Say you wanted to enter a $2,000 position right here. Okay, man, fill for 1,000. If it's going in your favor, right? If it goes, breaks 390, comes up for a retest, rejects it again, fill for another 1,000 and take it. If it fills for 1,000 here and it goes back up to 393 and it starts to reject and your contracts are down by 30%, 25%, okay, fill your next half position here and then take it back down, get a better fill. Or if it just keeps ripping, oh, guess what? You're cutting your position, but you only risked 1,000. So you divided your entries. You planned your trade. Thoughts on tickers like K, they held up on Friday. K, what's K? Kellogg's? Wallah, Kellogg's. They make cereal, bro. Of course they will hold up. Allah, that's not great. This isn't bad. How did it post this here? What else held up? I don't think Costco held up. Well, it is holding up relatively strong all year. Walmart. Ooh, Walmart smashed my G. Walmart looks like IWM. Let's see. What EMAs do you have on the chart? I have the 200 weighted moving average. I have the 200 exponential moving average. And I have the 200 simple moving average. Sorry, I'm getting to your messages. On a contract that has very little to no volume, if said contract goes deep in the money, are I obligated to fulfill the other side of the trade? Yes, they are. Are we guaranteed to fill if we are trying? Yes, you will always get filled. Just the same way the broker writes up the contract, they have an obligation to buy that back. That's why they'll always have a market price, especially in the money contracts. So you should never worry, even if it has zero volume and zero open interest. You will be that one volume that sells. Thoughts on ticker like K? Wallah, brother, this stage in the market, we're kind of like at do or die. Um, Another very volatile week ahead. I don't want to make any more assumptions. I really thought 3,800 was going to be the bottom, but if this does break, we're just going to have to play the trend. And looks like we could be in a recession. Test 3,800, then rally. That would be the perfect scenario. What would you say to smaller accounts that don't want to use stop loss due to fear or running out of buying power for the day? Um, Look, there's instances like you said. I mean, I'm focusing Nvidia this week, and let's say you know it does break up. I want to get inputs, and it does break above 172. Um, the reason I would tell you to keep your percentage per play limited, it also solves this issue of running out of buying power. That's one, right? Because if you're using 5% per play, then you can do that 20 times a day. And if you're taking 20 trades a day, then you're probably over trading, right? You see, everything fits together. Just stop trying to get rich quick. That's it. Even if you don't have buying power, you should wait. No, not basically size for zero. No, no, no. Don't feel the need to be in a trade like 24 hours of the day, right? If you see a setup, right, like this is bear flag in on the hourly, market's showing weakness, whatnot, 169 breaks, boom, we'll short it, right? But if 169 doesn't break and this bear flag breaks above and it's a double bottom here, there's no point in me staying in the trade, even if I'm sized for zero. I'm all like, imagine I'm already sized for zero and I do just cut it. Why? Because خلاص, there's no point in holding this. For you smaller accounts, there's really no point in holding this. For a bigger account like me, I can hold this, whatever, I don't care. Why? Because I have enough capital elsewhere so I can go and make it up on another plate if I want to flip to Tesla. Tesla was showing relative strength in this market. Everything closed down. Tesla's showing relative strength. I want to see, is it gonna go above 714 now? I'll take it to 728. Above 728, 744, 752, 761, and so on and so forth. Right? This thing about opening up IBKR to not run out of buying power, you also need to have discipline because it will also eat into your account if you keep over trading, if you have no discipline as a trader. I've read 38.50 on the day the market started the bear market. Is there a reason for this, or is this people spreading nonsense? I think this is because it's a 22% drawdown or something like this. Because when we did enter here, when we did drop for a little bit, which was I think for 15 minutes, and that was below 3850, it was like the shortest bear market ever or whatnot. Or that's the news that came out. I think that's because of a 20% calculation, if I'm not mistaken. Yeah. Yeah, I think it's like a 20% calculation thing. Or 22%. But yeah, say we are not already in puts. If market crashes and the premiums are expensive, can we still scalp OTD and still make money cheaply? No. Like you mean crash crash? Yeah, I don't think you will be able to. But is there any questions in regards to sizing, in regards to risk management? Are your levels from daily? I use the daily 4 hour and then I brush it up on the 15. Starting off, you should probably have your levels different in different colors, I mean, or in different variations, whether it's a dotted line, dashed line, or dotted line, or like a solid line. But as time passes, things become just visual. You know, the visual. Any other questions? When do you decide it's time to size up, and how do you deal with the psychology of sizing up? I don't need to size up, and you don't need to size up, and no one needs to size up because 90% of the people I know that have sized up before their time and that didn't let it come naturally all got smashed. Can you show the notepad? Yeah. Any other questions? Size up always. No, don't size up. You need to manage your risk. You need to compound your port. Risk management over technical analysis. Risk manage. I mean, look, I've always said this, right? We all went to school and not all of us are smart. I'm saying this about myself. This is not about any of you guys. I don't have a college degree personally, right? But I can trade. Risk management is what really determines your demeanor as a trader, your mentality, your approach towards the play, right? It really is over technical analysis. We all know technical analysis, but a lot of us are emotionally approaching the play in different manners because of our sizing. You know, because you have $1,000 port and it's your last $1,000 that you're playing with, and your full port Tesla calls and it's freaking crashing. And then you're like, oh, what do I do? Do I get out? Do I hold for a Hail Mary? What do I do? You can't make decisions like in that state. If you start with a 1K account, what point do you withdraw money? Brother, as soon as you double your account, I I never started with uh, like that
low of a portfolio. But when I did start making money consistently, I forgot what it was, like a newsletter or podcast. I remember it was manage your life in thirds. Take a third to spend, third to reinvest, a third to save. So every time you double your portfolio, take a third out to reinvest, and that third out to reinvest. Look, focus with me clearly. That third out to reinvest can be keeping that third in your portfolio. So say you take $1,000 account to $2,000, right? I would take out like let's say 650 bucks, whatever. I'll go like take my girl out to dinner or buy new cakes or whatever. Treat yourself, you know, reap or like what is it? The fruits of your labor. Enjoy the fruits of your labor, right? And a third of it you save. You keep saving, right? You build consistency in the market. You build consistency in building up a cushion, and you also treat yourself. Now, I'm not saying that always treat yourself, at one point in time when you become consistent and you're making 500 bucks a day, 400 bucks a day, 700 bucks a day, 1,000 bucks a day, 10,000 bucks a day, whatnot, you're not going to go and spend $3,000 every day, right? So essentially you just subconsciously start saving up more and more. And that's either a cushion for you, or that's also an opportunity for you to take the profits and reinvest it. Reinvest it. I don't mean like, oh, just, you know, it could be, don't just throw it like into something else. Like you can really just keep that portion in your portfolio and that could be growing, right? So if I say I'll start the second week from 1,350, the 350 I left, and I take it to 2,500. Same thing, rule of thirds. I made 1,200 bucks, 400, 400, and I'll leave 400 in the port. So I'll start the third week with 1,700. Hey, reality, can you type the EMAs you have on your chart, and are those for all time frames? Yes, this is all time frames. Um, they're not EMAs, okay? The first one is the 200 weighted moving average, 200 exponential moving average, and the 200 simple moving average. And they can be used as points of support and resistance. Here we held it once, broke it down, resistance. So what time frames are you trading on usually during the day? So this is my trade setup during the day. If anyone was like wondering, if I'm day trading, you're asking me if I'm day trading, I'll enter on the 1, and then I'll have the 5 and 10, and then I'll just after my entry, I'll probably watch the 15, 30, flip through it, or I'll just keep it on the 1. I don't care. A small part. Do you recommend focusing on one trade at a time or keeping a certain percentage cash at all times? You should always have over 50% of your portfolio, 60% of your portfolio really should be in cash. That's how I like to keep it. If you're a smaller portfolio, of course, don't expand into looking onto a lot more plays. Try to focus on managing 1 to 2 plays. As you get better, then you can manage more plays. Trading, thanks. No problem. Yeah. I mean, this is then I love trading view because you can just press alt and zoom in, get back to your setup. You won't get rich in trading in one day, but you can definitely go broke trading in one day. 100%. I've seen it. I've heard it. you know, what is recommended account size to start with? Uh, Honestly, man, to make good money, uh, and if you're really going to follow risk management and sizing and really respect, the calculations of the cost of the contract, how many you can take, how many can you trim, focusing really on when you realize your profit, as long as it's over the cost basis of the remaining contracts that you have open, you can leave them to run. If it's not above the cost basis of your remaining contracts, you can't let them run. I would say a $3,000 to $5,000 account is good. You can make good money on it. 8 to 10% a day trading options is not undoable with only risking 5 to 10% of your account. Very, very doable. And then as you get consistent, you get more confident. As you get consistent, you know, sizing up is something that you need to do as a trader for you. No one can come and tell you, well, I'll come and risk more. I'm not gonna come and tell you that, right? My experience, once you're able to leave runners, that's when your account will really start to grow. Those runners will stack. Yes, that is correct. At what point do you recommend trading on Friday's ODTE? Can you elaborate that question? Can you elaborate on that question? Sorry. Uh, if you're down for the week, Friday is not your best bet. But if you're still uh mm, in the right, state of mind, I would recommend to just trade the open. That's it. Trading with profits. Always trade with profits on Friday. That's like a well-known rule, like for option traders in the option world. Always trade with profits on Friday, especially, I mean, only if you're trading ODTE contracts, right? I mean, if you're taking next week or 2 weeks out, then yeah. Show us a quick example of your strategy. Of what strategy? What do you mean by strategy? Futures gap down, how would you approach mapping trade ideas for tomorrow with a gap down like we have right now? 1 second. Futures gap down, how would you approach mapping trade ideas for tomorrow with a gap down? I mean, I'll have my levels. I have all my levels ready on SPX. If futures gaps down, just come back and reassess, my SPX levels, see where it's at. And because I've been trading before, I mean, I have these levels to the downside, but it's really from level to level. That's really what it is for me. And I use the indicators as confirmations for entries and for exits. That's really it. If a trade goes green, should it ever go back red when you're growing a portfolio? No, it shouldn't. No, it shouldn't at all. ODT is strictly for scalping for more ODT. No, I can't tell you that because this was not a scalp, and you would have banked like if you traded this. God damn. God damn. It would have made 1,500% easy on this job. It's just I can't tell you, oh, wallah, come and trade a contract that expires in 30 minutes. I just can't. I will never condone this. This is just, it's all dependent on your risk adversity. This is not something I could ever tell a trader to do, is come and risk your money at the last, 15, these contracts don't even expire tomorrow. They don't even expire like in 8 hours. They expire in 30 minutes. But then again, that all comes with experience. Did I take the short? No. Do I know anyone that took the short? Probably. What are you plotting pre-market? Do you supply and demand chart patterns? Take us through your thought process. You took it. You just did.
But I'll do it right now. Just let me end the recording. If there's any more questions for risk management and portfolio sizing for small accounts, what should be a target percent to reach without getting greedy, but at the same time build port daily? So Aldo, setting dollar amount targets, percentage targets is uh, adding on more pressures on you as a trader. It's already the market's already hard enough. Waking up, being in the right state of mind, approaching the market. Focus on consistency, and everything will just follow after. Focus on good execution. The money will come. The profits will come. The consistency will come. The compounding will come. Right? Uh, Like Maya Monster said, anything over 5% is really okay. What are you plotting? Supply and demand? I'm looking for my levels to hold, basically. Like, I'm looking now, what is it? 3,900 to hold. If 3,900 doesn't hold, it's gonna be 3,876. If 3,876 doesn't hold, we're probably going down to 3,830. If 3,830 breaks, 3,810. 3,810 breaks, we're going down to 3,788. Right now, 3,874. How? ES is open. Oh yeah, we crashed. Yalla. 38.74. That means we closed $6 above. 39.06 is 20 points down. 38.74, meaning 38.80. We'd be we'd be here. So it's probably coming down to 38.75. Yeah, 38.64. If that level doesn't hold, it's 38.40. And then that would be this wedge trend line that we built here. Kind of broke out of and went back in. So it's just really levels. Play the levels. It's pretty oversold here on the 4 hour. I can tell you this. And there's a gap on futures, and now there's going to be two gaps on SPX. Fantastic. It's going to be a double gap up if it stays like this. Double gap up. This is going to be gap down. It'll open up right here. 1, 2. And then, I mean, I don't know, but I don't think we leave. We do leave gaps actually on the way down. Get ready. It's going to get bumpy. Your best method to find accurate levels. Supports and resistances. Supports and resistances. Do you like bear markets? I mean, they're alright. They're alright. Doesn't mean you can't play calls. I mean, we've been playing calls all this while in a bear market. We played GLD on breakouts. We played Tesla on a breakout. And it's been pretty bearish. But I mean, what else did we play? We played the Amazon stock split. Would it be possible for you to include stop loss levels in your watch list updates channel, or is it the next level as your stop? Next level is my stop. So, like I said, okay, let's go for example, Tesla. I will probably Tesla's looking strong for me. Okay, so I'm looking tomorrow. I mean, market is looking pretty fucking weak. Um, 700 breaks, 684. If 684 breaks, short it. Why do you say fuck your puts? Oh, because we were in a bullish market forever. Quad witching is this Friday. I believe last month there was a crazy rally from shorts covering, if you remember, 520. I think so, yeah. I remember quad witching was bullish. Yep. I mean, it's at the same level. So, can we see another capitulation move? We can. Can it drop to 3,800? It will, well can. Just remember Kramer is bullish. Alright, we're bearish.
Alright, I'm gonna go ahead and stop the recording here. Let's see.